Shorting emerging markets happens to be one of the hottest trades ahead of tomorrow's Fed decision. Take a look at the results, in fact, of Bank of America's fund manager survey released today. When asked what managers viewed as the most crowded trades in the market, 53% said long U.S. dollar, 16% said short commodities, 10% pointed to shorting global equities. So what happens to some of these crowded trades tomorrow after 2 o'clock? And it's interesting because Marco was just talking about what happens with these crowded trades when there's mean reversion here.
Well, I started buying EM yesterday. I think EM's going to rally. I think tactically you've got an EM rally here. I think EM corporate debt is largely an Asian corporate debt issue. I think the rest of EM actually does okay. I think Mexico is the most interesting, and Korea. But again, this is a tactical trade. I think EM's going to struggle, although I think the currencies are oversold, and this is a place you start buying them.
But, here's the thing. In Seema's report, we're talking about dollar-denominated debt and how prevalent it is outside here, the world. And a lot of this is related to a lot of what we're talking about with the potential contagion here with high yield and the commodity bust. And if you think that the commodity structure is lower structurally, it's a really hard trade. We know that Petrobras, for instance, has close to $30 billion in debt coming due next year. So to me, I think it has all the makings. I suspect your tactical trade is a mean reversion back to about 36 in the EEM, but then you want to be out at some point.
You're getting that levels, getting above 33. You trade it from 33 to 36.
It seems like that's going to be ground zero next year if we have any problems globally.
Tim mentioned the EEM, so let's talk about it. I think it bottomed out at 30 in that big sell-off back in August, and we made a run at it again over the last week or so. But against that level, I think exactly the risk-reward to be long EEM, the ETF, probably sets up really well, as does, in my opinion, the chance for gold to rally, especially if we see the dollar get whacked as this trade potentially unwinds.